It looks like it's going to be tough times ahead as the Reserve Bank thinks about its next move to tackle the country's high inflation. Now, some economists say we can expect a hike, and already a number of people are worried about this hike and what it's going to mean then to their pockets. Tshepo Mongoai is our economics editor and joins us live now. Tshepo, I always don't like talking about this, but you know, one asks, is it a 25? Is it a 50 basis points? Because it looks like there's some varying views here.
No, absolutely. I think I would say let's wait and see until Thursday. But the view broadly is that we could see another hike, and it's informed by a slew of economic data that has been released in the past few weeks. That points to still very stubbornly high inflation, even the expectations. Remember, the Reserve Bank wants to ensure that by next year, in fact, the third quarter of this year, they say inflation should actually start falling below that midpoint, and it must actually come down. And then by fourth quarter of next year, it should be in the midpoint of the target band. So in order to achieve that, they must actually pursue this aggressive rate hiking cycle. But also, although they never admit, they're also looking at what's happening elsewhere. Many, if you look at many central banks on the continent, they're mirroring exactly what we are doing. They've also been hiking aggressively in line with the EMEA developed countries. A typical example, Nigeria, they have huge inflation at the moment, around 18%. That's the April number. And they've been pushing interest rates. I think now they are at about 22%, which is the key lending rate. But for a country like Nigeria, which doesn't have well-developed and deep markets like we do, transmission mechanism when you hike interest rates sometimes don't actually work as well as they should, because, for example, they have about 5% of their population who are financing their houses through mortgages. And that's a small, so it takes time. They also have just made an announcement that they will increase salaries by 40%. That's a huge number. Of course, that's a little bit of extreme, and sometimes they would say we're not comparing apples with apples, but there are a lot of things that are common in terms of what popular decisions in an economy can actually ruin what's left of it. We also have, as the package you've just seen played now, we've got 7.5% that we've given to the workers. Of course, the Reserve Bank will have to look at that. Are all those decisions supported by the productivity outcomes? And we know it doesn't always happen. And as a result, higher salaries translate into more inflation. The rent, it's something that the bank will have to look at. It's a major risk, of course, the inflation. We've seen it at what, 1945 to the US dollar last week, because of all the discussions. In fact, it started weakening before we even talk about the issue of finding the weapons and so forth. It has been weak. So that is going to mean that they also need to be much aggressive in order to tame inflation that is going to be brought about by that weaker end.
What does it mean then for defaulters? Because I suppose, I mean, there hasn't been much of a concern on that front for quite some time, but looking at these consecutive hikes, banks should start being concerned.
Well, the last MPC, the Reserve Bank, indicated that their policy decision is becoming less accommodative. That means that there will be signs of stress in the financial markets that we must be looking out for. In other words, we start seeing default rates going up, bad debt. Those provisions, I know banks have made sizable amounts to deal with that. But of course, the issue is it what is provisioned? Is it what they have in mind? Or is it something that is going to surprise them as more people become under pressure, more people who are just getting by? Maybe the risk is it's much more than they're expecting. That has not come across, but the feeling you get in the market is that, well, we are in control. Yes, we know consumers are under pressure. Yes, we know that there are defaults, but this is what we've had in mind. We've made adequate provision for that. And it's something that I think going forward, the bank will start communicating and you know, also the results from various financial institutions would start really honing in on this aspect.
And it's going to really be interesting to see, you know, just how much in distress the people are in, especially when you think of, you know, just some signals that we are seeing on the financial front in the future. But let me thank you for coming in Tshepo. That is our economics editor, Tshepo Mongoai.